In this presentation, I am going to teach you a best intraday trading method. So, this is a method innovated by Smart Finance, our company, and we have done a extensive research in the trading methods. So, this is one of our method which you can utilize, and it is an entirely different method. Here, we are using the Fibonacci, we are using the Volatility Principle. You require a couple of minutes to understand this method and use it. And this technique is more than 85% accuracy. Yes. And after learning this particular method, if you think that it is a valuable method, then spread a word, share with your friends, share in your Facebook or social media. Give a like in the video so that others can also take the benefit of this particular method. So what is this method actually is? We have innovated 34 intraday trading techniques. Out of that, this is one of the techniques. So 34 intraday trading technique we have innovated. Out of that, this is one of the techniques. So in this technique, we will be calculating the daily volatility from the past 10 days data. Past 10 days data. And we will be calculating the expected price range using the daily volatility, and using the Fibonacci, we will be calculating the trade entry and exits also based on the Fibonacci principle. And this technique's benefit is you can use this technique without the help of any software. You can just formulate a small Excel sheet, and in that you can just calculate and do it. And if you compare its success with the technical studies, technical indicator oscillator studies, it will be more than 100% accurate as compared to technical studies. And you can use this particular technique in equity, futures and commodities. So let us start. So what I am going to do here today is the 1st August, and I am going to analyze the trend for 1st August using this method. So for that I require a couple of data. I am going to do for the Nifty. So past 10 days data closing prices of Nifty I require, which is 18th July to 31st July. It is having the past 10 trading days data, last traded price of the Nifty. So I have taken it. Then I will be calculating the daily volatility. It is very simple to calculate the daily volatility. So here what I have to do, I will be just taking logarithmic function ln. I have to type, and I have to take 19th July price divided by the 18th July price. So this is called absolute return. Then I have to, whatever the value ln values I got, it's a double multiple or square. So if you put a cap symbol and give 2, it is square. So whatever the data I got here for the 19th July, same thing I will copy and paste in the remaining things. I will get the ln values, ln square values for the different dates. I got for 19th July, same way 20th, 21, 24th, 25th till 31st July I will be taking. Then what I have to do, I have to take the average, because all these things I am doing to calculate the daily volatility. So I have to take the average. So it is the Excel sheet function is there. So just type average and drag from here, from where your calculation start to the end, and close it. This average you got, same with the square returns average you take. So average function you type, and from the top, from where your calculation started to the end, drag it, close. So once the averages are calculated, you have to calculate the volatility, daily volatility. For that, what you have to do, whatever things you have calculated in the square ln, so we can name it as the square ln values, and this is the ln values. So this for our understanding. So here, after this thing, whatever the square ln values we got, that we have to take, and we have to subtract minus symbol ln average, whatever we got, that ln values whole square you have to take. So this is 1.53 and some values has come. So this is known as the variance. So this is the statistical term, and you have to just take the square root of this particular variance. So it will give you the daily volatility. So this is the daily volatility without taking any percentage. If I wish to take the yearly volatility, I will take daily volatility multiplied with square root of 365. So this is for my yearly volatility without percentage form. If I want it in the percentage form, then I have to multiply these things with 100. So yearly volatility is that 7.47%. If I want 10 days volatility, I'll take the daily volatility and I'll be multiplying with the square root of 10. So this is the volatility we have calculated based on the past 10 days data. So once we have calculated this volatility, next our trend calculation will start. So 31st July was the last trading day. We are going to calculate the trend for the 1st August. So I am taking the 31st July last traded price as reference. So 10,103 the price it has last traded. I have taken that price as a reference price and I am going to multiply this one with the daily volatility. So I got 39.52 price range. So this is the price range I will be utilizing in my Fibonacci ratios to calculate the trend. So Fibonacci ratios are 0.236, 0.382, 0.5. All these ratios are Fibonacci retracement ratios. And as per the Fibonacci principle, what happens whenever the price crosses 0.236, it sets the trend. Means uptrend, if it is crossing 10,112, I'll say that it is entering to the uptrend. Once it is covering this 10,118, I'll say that it confirmed the trend. Same way, if it is falling below 10,094, I can say it is entering to the downtrend, and if it is fallen below 10,088, then it confirms the downtrend. So this is what the trend part of my Fibonacci. So I'll be showing you the calculations. So here Fibonacci ratios I have taken, this is the confirmation, and most of the Fibonacci trends are given the reversal at 0.618 to 0.786. That's why I made it as a colored zone. So it is a trend reversal zone for the Fibonacci. So this is the understanding of the basic understanding of Fibonacci. Now coming back to our method. So we got 39 point. So this 39 point will be multiplying with 0.236 and 0.382. All Fibonacci ratios, I will be just multiplying this 39.52 price range. I will get the respective Fibonacci price ranges. Then I have taken a reference price for 31st July. In 31st July reference price, I will be adding this Fibonacci price ranges respect to that particular Fibonacci ratio to get the uptrend. Same way I will be subtracting the Fibonacci retracement price range from the reference price to get the downtrend. So this is my uptrend price points. This is my downtrend price points. So this is the things I have got it using this 10 days data. So keep in mind the most important factor is 31st July post market hour. Once the market ended, we did this calculation for 1st August. So once again I will tell you 31st July post market hour, we did this calculation for 1st August. So this is well in advance. So let the 1st August market to open, we can see what it is giving you. So let me go back to this calculation is over. Now let me go back to the 1st August data. So I am going for the 1st August data. This is what happened today. So I am recording it on the 1st August. So previously 10,103, this is the price it has closed, that we have taken it as a reference. Today it has opened at 10,115, one a high of 10,134. Currently it is at 10,118. This is what the today's action is. 10,115 it has opened. So if I go back to my calculation, it has entered to the buy zone. the uptrend zone, crossed over to 10,118. Most importantly, the day's high till 12 o'clock, 10,134. This is the point from where it has reversed. So this is the point from where it has reversed. So my calculation for reversal is 10,127 to 134. So very much in line to my calculation, it has reversed from this zone and it is at 10,117, not gone to the downtrend level, and it is still in the uptrend levels. Let us see what happens by the day end. So this precision in the calculation, reversal happened at 10,135. On opening basis, it has given a chance to enter a buy trade and you have achieved specific success. So this particular method's accuracy you can test by comparing its calculated values with the day's high, day's low and day's closing price. So if you just compare, if we will be taking a past 3 months data I have taken from 26th May to 31st July, same way of calculation, I have taken the Nifty's open, high, low, last traded price, calculated the volatility, buy entry prices and comparing it with the next day. This is the 9th June. We have calculated for 12th June. And 9th June, it has told buy entry is at 9725. 9725. In fact, this is for the this I can focus it a little bit. So 9th June. By taking the 8th June data, we have calculated for the 9th June. So 9th June, it was telling 9725 above uptrend and this uptrend having a maximum target till 9738. So you can see the high 9735 level it has come. And you can say open it 9707, low was 9669. So you can see the downtrend. So you have third target till 9702. You have got till 9668. So both the sides you got these things. If you compare all this data the way I have told and the way we did a calculation and these are the targets we have achieved, you will find out that more than 85% of your trade will be successful. So just you need to formulate a Excel sheet, take the past 10 days data, calculate the ln values, ln square values, take their average, calculate the variance from the ln square values minus ln value whole square. Take the square root of that, get a daily volatility, multiply with the reference price, get the price range. This price range you have to multiply with the Fibonacci ratios to get the Fibonacci retracement price ranges. Add it with the reference price to get the resistances. Subtract it from the reference price to get the supports and then follow it. You will find out 85%, more than 85% of your trades will be successful. Sometimes you will have a gap up or gap down. If suppose the market opens very much gap up, say it is opening at 10,123 per above, so then you need to do a small adjustment. So instead of taking 10,103 as a reference, you take the opening price. Suppose Nifty is opening at 10,123 or 127 or 125. So you just change that last traded price of previous day to the opening price, so you can get a new level. So in case that is a gap up, if there is a gap down, if this is the instead of opening at 93 to 87, 10,094 to 10,088, suppose if it is opening at 10,050, just change this opening price, so you will get the new levels for the day and follow that level for your intraday. Keep using this particular level, you will feel the difference. And this is how we have innovated different product of the intraday. You will get the 34 intraday trading technique along with lot of WD Gans principle in my book on Gans method. So which is having 34 innovative intraday trading technique. So this book you can obtain from our website, which has all details about the 34 innovative intraday technique, which is having a high grade of accuracy as compared to the technical stuff. If you wish to take a course and if you wish to take up a software associated with this particular concept, you can choose our volatility software. So same way it calculates. However, we have taken the real-time volatility instead of past 10 days data volatility. We have taken the real-time volatility, which gives a greater accuracy. For any kind of product query, call to our sales number. It is given here. And if you think that this particular method of intraday trading is useful, first use it, formulate an Excel sheet, use it, compare with your technical studies. If you find it is useful, then please do share with your friends. Please do share in your Facebook, Twitter and social media so that others too can take the benefit of this particular method.